Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm talking to you from Queens, New York City, the borough of Queens, in New York City, and it is October 27th, 2020. And I do like to always remind you that I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, which you can sign up for by going to miningstocks.com, and likes to put in a plug for my friend Chen Lin's letter, What is Chen Buying, What is Chen Selling, at chenpicks.com, CHENPicks.com. And as always, we'd like to remind you of Michael Oliver's excellent work, and he'll be with us in just a few minutes here. It's olivermsa.com, olivermsa.com for his hard-to-beat chartist. The chart work that he does, I've never found anybody better from my personal point of view as an investor. And Michael will be with us, as I said, just in a couple of minutes from now. And I do want to thank all of you for sending along your comments, whatever they may be, to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. And I want to thank our sponsors for making this show possible. Our sponsors for this week's show, Benchmark Metals, NV Gold, Hannon Metals, Irving Resources, Novo Resources, Sitka Gold Corp, Lion One Metals, Grand Partage, GMV Minerals, and SK Mining Corp. I've titled today's show, Seeking Optimism from Frank Holmes in This Dystopian World. And Frank Holmes, Jim Grieg, and Michael Oliver are my guests this week. With presidential candidate Joe Biden talking about a dark winter and a never-ending coronavirus that keeps us locked in our houses for eternity, and with the nation, in fact, facing a very difficult period of economic payback for living beyond our means, beginning with President Nixon's removal of gold in 1971, my desire for some sunshine in this depressing environment caused me to seek a guest this week who I thought might be able to lighten things up a bit, and that's Frank Holmes, who seems to be able to look on the bright side when few others can seem to do that. I expect Frank will be bullish on gold, but I'm guessing he may also find some opportunities in other sectors that actually contribute to our well-being. So I'm looking forward to hearing what Frank has to say. Not only how to survive, but how to thrive in the months and years to come, irregardless of the outcome of the November 3rd election. So Frank, as I said, will be with me, and he'll be joining me in the second half of today's show. In the second segment today, Jim Grieg. Jim Grieg will be, he's the president of Benchmark Metals. He will join me. Benchmark is clearly delineating a world-class gold and silver deposit in its Lawyers project that's in the northern end of the British Columbian Golden Triangle. Despite some very good news, the shares have not been performing all that well, which leads me to believe this may provide a great buying opportunities for those who recognize the value, the intrinsic value that is being built there through their exploration efforts. But I certainly want to hear what Jim has to say about the company's results. So they've been excellent from what I can see, and perhaps he can give us some insights as to why the shares have been weak. A lot of times it has nothing to do with the fundamentals of projects, and there are other reasons why shares sometimes decline, and that oftentimes provides great buying opportunities. So we'll want to explore that possibility with Jim when he's on right after our first commercial break. Before I say hello to Michael today, I do want to tell you that I have experienced firsthand the heavy hand of an emerging American dictatorship that is clearly underway given the suppression of the First Amendment. The deep state, which very much includes the social media giants like Twitter, Facebook, and YouTube, believed that something James Perloff said on my October 6th show was too dangerous to allow you to hear or to allow other people to hear. As many as possible, they want to make sure they don't hear it. On that show, we talked about James' latest book on the subject of COVID-19. For the life of me, I can't think of anything that was dangerous, so dangerous in my discussion with James, other than his quest for the scientific truth about COVID-19, which is seemingly being used as an excuse to remove the liberties from us that a ruling elite can gain power and eliminate national governments. That's the way I read it anyway. And I can't think of any time in recent history that our civil liberties are being more threatened than perhaps during Roosevelt's racist reign of terror against Japanese people during World War II. Well, you can't listen to the discussion on YouTube because that's been removed from my site. but it is archived on our podcast page at J. Taylor Media. If any of you can remember that discussion, or if you care to go listen to it, and if you do, let me know if you hear anything that's really threatening. What on earth is threatening to Americans that James Perloff said I'd like to see and hear? If any of you can help me understand that. We haven't really tried to contest it with YouTube. We take YouTube. They have the ability to do what they want to do. It's a private company, and they can do what they want to do. But it is troublesome. I think it's troublesome to an awful lot of people that believe that our First Amendment rights are being suppressed. And if a country is really in search of the truth, then why not let it be aired? Well, in any event, that I just wanted to share that with you because it is, obviously is very troublesome to one who thinks that the First Amendment rights are absolutely necessary if we're going to retain our freedoms and liberties that we've enjoyed in this country since its inception. All right, well, on a happier note, I'm glad to say that Michael Oliver is with me again. OliverMSA.com. OliverMSA.com is where you should go to follow Michael and to sign up for his excellent service. Thanks for joining me again, Michael.
Hi, Jay. Good to be back.
It's always good to have you here. Every other week it is. It's a habit, and it's a good one, and we're glad that you're here today. You have been talking about commodities for some time, and you watch the Bloomberg Commodity Index closely. What are you seeing now? If you can give us an update on what you're seeing in the commodity complex.
Well, of course, we love gold. We've loved gold for several years, and silver. In July, silver broke through a number for us that was last buy signal that was explosive, and it was at $19.48, and now it's living up in the mid-20s, having approached 30 from the underside. But forgetting the monetary metals for the moment, they're in leadership position, no question. But the commodity complex, when you look at oil, grains, soft commodities like sugar, cocoa, coffee, etc., have been depressed ever since they made lows, and most of them around 2015, 2016. And they've been wandering sideways, basically with the refusal to go, either one, go lower, or two, to go lower and stay lower. For instance, oil poked down real hard in a panic on an expiring contract several months ago, early this year, but then rebounded quickly. It's back in the 40 area. Most other commodities like copper, for example, came back recently, early this year, and tested but didn't violate their prior lows of that 5-year period. And it's really just been a big clump of ink on the price charts at very low, historic depressed levels for most commodities when you compare back to price highs that we saw in most commodities in 2011, for example. So you have price basing that was evident on the price charts if you're objective. But via our momentum metrics, we've registered, as far as we're concerned, we're fully bullish on commodity complex, not just one, but the grains, oil, etc. And we think that that's going to be the surprise ambush among the asset categories that very few are talking about with any seriousness in terms of being violent and sudden. And I think that the commodity complex has the best chance of producing over, let's say, the next couple quarters, a greater percent increase than maybe even gold. Now, not that gold's not in a leadership role, it is, and I think ultimately it will continue to outpace commodities. But because of the depressed, it's like the metaphor I use repeatedly of a beach ball. You push it underwater and then let go of it. You know, and when it comes rushing up above the water level, that's where I think the commodity complex is right now. We're seeing a particularly potent action in the soybeans. Wheat's now joined in. Corn was positive, second in that group. Oil's crossed some numbers that we think are important, and though it's very quiet and they keep talking about supply and so forth and so on, I think that's a positive situation. Natural gas is now trend positive. So no matter where we look in the commodity complex, we see positives, technical positives. So I think as an asset category, that's a place to watch. Now, some people don't want to trade futures. That's fine. You can always trade futures unleveraged. If you simply set aside the full cash value of the contract, you're not really using leverage, so most people aren't aware of that fact. But there are ETFs out there that could reflect these various sectors, grain ETFs, oil ETFs. And one area in particular that's commodity related that we think might have the greatest percent upside vacuum effect, once it turns, because it's simply oversold and it's too deep, is some of the subsectors in the oil complex. One ETF in particular is XOP, which is oil and gas exploration. And I think of all the subsets within the oil complex that could have a rapid upside percentage gain, that's one I'd be looking at. We also see positives in the fertilizer stocks. You're going to grow crops, you need fertilizer and so forth. So it's time for investors, if they want to be in stocks, to be looking at beat-up commodity-related stocks in the grain area or in the oil area or in the base metal mining area, et cetera, like Freeport-McMoRan, for example, which is copper and gold. Anyway, we think that broadly is a category that is going to produce more profit quickly over the next couple quarters than anything out there.
All right, Michael, you had an ETF that more or less mirrors or comes close to the Bloomberg Commodity Index. I don't recall what that is. Can you?
DBC is one. It's the symbol DBC. There are others out there. Of course, when you look at ETFs, what you want to look at is not just whether it tends to reflect the price action of the asset you're linking it to. For instance, the Bloomberg Commodity Index. So if you look at a chart of DBC and you look at Bloomberg, they look pretty much the same. So that's good. But the other thing to look at is the daily volume. And you want to make sure if you get into an ETF that you're getting into one that's got good liquidity.
Sure.
And DBC has it, and there's half dozen other symbols that attempt to replicate commodity action, and it's just probably a coin toss as to which one's better or not. But liquidity is an issue.
Absolutely. Well, with 30 seconds left or so here, Michael, the dollar. Is this bull market in commodities contingent on a dollar decline in the index?
I don't know if it's contingent, but I think you're going to get one. The dollar decline. It would help. There's no question. But then again, when I look at gold, look what it's done for the last 2 years.
Yeah.
And it did it mostly without any dollar weakness.
Yeah.
Okay, so to answer that question about commodities, can they go up with the dollar steady? I don't know. Gold went up with the dollar steady, and the dollar right now looks like it's on the edge of another cliff. In fact, about a point or so below where we're trading right now in the dollar index, I think you're going to have a rapid collapse into the mid-80s on the dollar index, which is now in the low 90s. And I think, that will probably definitely assist the commodity complex.
Well, that would certainly be wind at the backs of gold and silver and the commodities, I would guess. So, Michael, thank you. We're out of time already. Thank you so much for sharing your thoughts with our listeners. It's greatly appreciated, not just by me, but by my thousands of listeners. So thank you so much for being with us again.